This is the trade that I took today. We didn't have any news, so I knew the volatility would be low. So I entered a long position after I saw that price wanted to go up. I also noted a point of liquidity, and that's where I set my target. I saw price forming a break in market structure, so I entered the long. I was also paying attention to time, knowing that we were way ahead of the opening at 9:30. So we had a little bit of time to see where price was going to go. I'm trading on the 15-minute, and then I switched and noted these relative equal highs. So I think that would be the target maybe for the day, but not necessarily my trade. I like to try and exit at the first level of liquidity. I don't want to be in the trade too terribly long because that's when things can go wrong. So I like to take that first exit, and this is going to be based on the 15-minute chart. When you see relative equal highs or relative equal lows, those are targets for liquidity, and I do expect price to go and get it. The question is when. The trade did work out. I was able to exit at my target, and I did have a $1,000 profit minus trading fees. So I am looking now to go back and show you a little bit about what I was thinking about and why I stayed in this trade, because it did take a while to work out. But my conviction was there, and I stayed with it. I was patient. A fair value gap was forming on the 15 minutes, so I knew that price had the potential to drop down into that area before going back up to reach my target. So I stayed into the trade. Even though it was a little bit painful, stayed in and waited for price to react. Price did reach my target, and so I see that there is a fair value gap above, and this is still on the 15-minute chart. So I am going to note that this is most likely where price went in, tapped it, and rejected down. And you can see those relatively equal highs noted above for that buy side liquidity. I'm definitely done trading for the day, but I do like to continue my analysis. 10 before 10.